All right. Good afternoon, everybody. My name is Mark, the stock market jobber, and I am a former institutional trader who now is dedicated to teaching people. I traded directly for Mario Gabelli and I traded directly for Steve Cohen, who are two of the greatest money managers in history. I was also the head of trading at three different money managers or institutional money managers, where I oversaw all kinds of strategies, including, yes, hedge funds, and I was an actual market maker, an actual real life hedge fund trader. So when it comes to trading, I've been around the block a few times. And I want to talk about Palantir really quick. This isn't a trade recommendation or anything like that, but it's just a little piece of knowledge that could eventually become a way that you can make your own trade recommendations. I want to talk about what resistance is. Resistance is a level where there is more supply or sell orders than there is demand or buy orders. Now, when a market's trending higher, like Palantir was doing back in October, there's not enough supply or sell orders to fill all of the demand or buy orders. So buyers are forced to be willing to pay a premium, like higher prices. And that forces the uptrend. When we get up to a resistance level, the tide turns. All of a sudden, there's more than enough shares to go around. The the sellers can the buyers can buy all they want to because there's a lot of sellers. A lot of times when we get to a resistance level, we get a fast sell off after it. Like it happened here and it happened here. Why does this happen? Well, the sellers are the investors who are creating the resistance at 9 start to get the feeling that there's other sellers in the market. That's why the shares aren't going any higher. So they start to freak out that they might not be able to sell at $9. So the first one will go, all right, well, I'm not going to sell at 9. I'm going to go to 8.90. And someone sees that, and then the next person says, I'm going to go to 8.80. And it becomes this snowball effect. So a lot of times when something gets to resistance and it doesn't get through, we call that a failure. When we failed that resistance. And a big sell-off comes. So the $9 level was resistance for Palantir back in early November, and it was resistance in January. And this morning in the pre-market, I believe that Palantir traded pretty close up there. I think when we looked at it, it was like at 8.90. Last trade is 8.81. So these resistance levels can retain their importance for a long time. And this is what we call market memory. So I know Palantir had some put out their earnings this morning, and it was the first time they've ever been profitable. But a lot of times the market fundamentals take precedence over any kind of fundamentals, if that makes sense. So I would be looking for resistance at 9, and if we don't get through, I think we could end up setting up for another rapid move lower. So if you're an options trader, you can put some puts on your strategy or on your target screen there, or your radar list, I should say, or your target list or your radar screen. And I'm confused today. So when things get to these important levels, they tend to make big moves afterwards. They don't really hang out at them for too long. So please make sure you subscribe to our YouTube page here, and please check out our website, stockmarketjobber.com. And should be a pretty interesting couple of days here with the inflation number out this morning. Sometimes we get delayed reactions, so we could get a big move tomorrow or the next day. All right, everybody, thank you so much, and I will talk to you soon.